Hi, everybody. Welcome to another monthly market outlook by Atlas Wealth Management. For more information on our services, please go to our website at atlasbuildswealth.com. We also have some articles, and you could also download a free retirement calculator. Hi, everybody. This is Ron Lang with Atlas Wealth Management, and we are going to be doing our May 2012 monthly outlook. And first, we're going to start with the S&P 500. We're going to build in a lot of technical analysis in addition to some of the fundamental and economic factors that are going into this. So what we see right now is on May 1st here, we had some terrific news at 10 o'clock. Everything kind of turned around here after the ISM report, and we are going higher. And as we've been talking about for several weeks, we were looking for a range here of about 1413 to 1425 on the S&P 500, basically to make what we call this double top or classic M pattern, which is going to kind of come down here. So what we're looking for here is for this to get to this range, and then we're looking for a sell-off. And what we need here is a healthy sell-off. We've had a terrific run here from early October, October 4th. This was that day. We've had a terrific long-term trend here. Now, one of the things that we would like to see here is a pullback before it goes higher. So one of the things that we're looking for here is, the infamous adage, sell in May, go away. But one of the things that we're seeing here is that we need a healthy pullback, perhaps to the 1358 level, which it came back to before and stopped before it goes higher. The second worst case scenario we're looking at here is 1300. There are some critical things that are going on in Europe and geopolitically, especially with the Middle East and the oil there, that could bring us down to the 1250 level. We don't see that happening, but those would be the absolute worst case scenarios here over the next 3 to 4 months. If you remember the last 2 years, May, July, and August were 3 very, very volatile months. One of the things that we are looking for here is a healthy pullback, not a major correction. If we get down to number 2 and 3, that would be more in the correction, the major correction. 1 would be a healthy pullback. So we'll have to see what happens here. We still have some more earnings and a critical report coming out this Friday for the unemployment. So that's what we see right now for the S&P 500. We don't look at this breaking through the 1425, 1430 level over the next 2 to 3 weeks. Again, we're looking for a pullback, and then potentially we're going to go higher here if the economic news and the EU crisis stabilizes. Let's check out our market leaders. We're going to start out with ExxonMobil. So looking at our top market leaders basically gives us a good indication of potentially where the market is going, how healthy the top big cap stocks are doing. So with ExxonMobil, as you can see, we've been very, very range bound here since December. And it's had a tough time breaking out of this $88 level. We're still looking for it to hit 90 before it pulls back. If it pulls back, we're looking for it to come back to the $80 level. Oil has pretty much traded in a range, so we're looking for ExxonMobil to continue trading in that range, maybe as high as 80, but as low as 80, but as high as 90. Everybody knows what's going to be going on with Apple. Apple's been pretty much attached to itself to a rocket ship. It broke this trend that it had going in December. Earnings came out, flew again, and now came back, rested off that 50-day moving average before it's now gone higher today. So one of the things that we're looking for here is for Apple to pretty much be range bound. It's going to take a lot for Apple to shoot through that $650 level, but we think it's going to take even more for it to get below 500. So we think it'll just be range bound, perhaps trading within as tight as a 50, but probably as much as a 75 to 100 point range for the next 3 to 5 months. Part of that reason is a lot of people are looking to see the Apple 5 sales what's going to happen here with the next iPad 3, some of the potential patent lawsuits that are coming out there against Apple. Of course, they're the big dog. Everybody's trying to take a shot at them. So look for some range-bound action with Apple. IBM has traded very well over the last 4 to 6 months, but even IBM has struggled to make new highs here. So one of the things that we're looking for here is IBM to potentially hit 210, 215 here over the next week, but we're going to be looking for a pullback probably to the $190 to $200 range, and for even IBM to be range bound here for at least another 2 to 3 months while things settle out in Europe, while economic numbers start to come out, and to see if there's any good political news to help out regulatory-wise for the technology industry. Even Microsoft has benefited from a nice run, which has pretty much been in a very tight range-bound trading range over the last 5 to 10 years. So one of the things that we're looking for, and we have this target set up about 4 months ago, we're looking for a $33.50 to $34 target range on Microsoft here, perhaps even within the next week or two. Had good earnings, had good guidance. If not, Microsoft could hit 30 before it hits 33.5, but we still think 33.5 is a good target for Microsoft. Now, Walmart has this Mexico bribery case that made the stock fall pretty sharply over the last week. This is one of those particular situations where you kind of let the dust settle on it a little bit. Once the dust settles on it a little bit, buy it on the dip. As you can tell, look where price came back. Came back to a very strong support demand range here. So we're looking for Walmart to go back higher, perhaps up to its previous levels, 60, 61 here. But again, we don't think Walmart's going to be shooting for higher anytime soon, making new highs. We think it's going to be range bound. Looking at Chevron, very similar to ExxonMobil, the oil market again has been trading at a range. So we're looking for a little bit more upside here to Chevron, but probably not new highs. So 110 is our target here on Chevron. Google has been a favorite of ours, and the nice thing about Google is that it's very cheap when you're looking at the fundamentals. Had very good earnings, popped up, then pulled back a little bit, trading very range bound here. We could see it going as low as 560 again, but unlikely unless there's a sharp pullback in the market that'll drag down Google with it. We're looking for it to make new highs. So we're looking for 660, 670 on Google, and perhaps to make new highs and go up to 700 before year end. So looking at Procter & Gamble, Procter & Gamble is typically a good barometer for the health of the economy, considering all their different consumer products and consumable items. And Procter & Gamble had a sharp pullback here over the last week. A lot of that had to do with earnings and guidance. But what we're looking at here for Procter & Gamble is maybe for a little bit more downside to the $62, $63 level before it goes higher. Procter & Gamble also pays a pretty good dividend. So I think the lower that this goes, even as low as 61 to 62, you're going to find a lot of buyers coming in here, even if there's not a tremendous amount of upside. In a down market, people will look for yield, and they'll come into Procter & Gamble. Now, Telephone had incredible guidance, incredible earnings. They're benefiting a lot from the Apple iPhone sales. Full disclosure, I am actually in this trade, and what you can see here is that it's on a nice longer-term trend. We just actually, this bump down here was declaring a dividend, which it's paying in a couple of weeks. And then once it had very good earnings, it just shot right through this 31.97 resistance. And it is still continuing right now here on May 1st. So we're looking for potentially more upside, but in that pullback to the market, we're looking to the $31, $32 range in the market. It's paying a 4 to 5% dividend. A lot of people are going to be looking for yield on pullbacks. GE. GE has been range bound for a little while, and we're looking for maybe a little bit more upside here to the $20, $21 level, but we think it settles in a trading range here between $18.50 and $19.50 for the next 2 to 3 months. Coca-Cola. Coca-Cola has been making some acquisitions lately, quite a few that many analysts like. We believe that this move here is too parabolic. So we're looking for a pullback to the $73, $74 level, where we think that'll be a big buying area for investors and institutions to come in. But we'll probably keep Coca-Cola pricing above the $74, $75 level for quite some time. Now, McDonald's was on a great run the end of 2011 and beginning of 2012. Now, as you can see, it broke that long-term trend, pulled back to the $93, $94 level. So what we're looking at here is probably more range-bound action. I would say between $93 and $100 is pretty good range-bound action. Basically, McDonald's, in order for it to get much higher, needs a catalyst. A lot of people look at it as still a cheap stock, but I think people want to see more guidance and more earnings, more multinational numbers that look good for growth before they hop on board with McDonald's. They keep adding menu items and people keep going there. So people are looking for even more growth domestically and internationally. Now, Caterpillar has struggled quite a bit over the last 3 months. While the market's been running, Caterpillar's been falling. The interesting thing about this is that a lot of people look at Caterpillar as a barometer for the market. So one of the things that we're looking at here is, where is Caterpillar going? So we think it could go as low as $98 here to the support demand level. But we think it could go as high as $109, $110. So basically what we're looking for here for the next 60 to 90 days is a range-bound pricing market for Caterpillar between 98 and 110. Looking at Home Depot. Home Depot has been a rocket ship that people have just tied it to over the last 7 months and has just been enjoying the ride. What we're looking at here is once we get that pullback in the market before the end of May, we're going to look for a pullback here probably to the 49, could be as much as the $46, $47 level before it goes higher. We believe that it's going to have a tough time sustaining higher levels, but we believe a very good price target by June is probably the $55 level. So we're looking for a little bit of exhaustion in pricing. As you can see here, the volume has pulled back a little bit and has been sloping down on average. So we're looking for a pullback here before we go higher. So one of our biggest barometers is the transportation index, the movement of people and goods across America. So one of the things that we're looking at here is, where is it going? We had a measured move here off of the price action that we had here back in the middle towards the end of 2011. So one of the things that we had looked at is a price target of around 55.43. But as you can see, we got range bound. Found a lot of support here as we expected in the 50-50 area. So one of the things that we're looking for here is more range bound action. We're looking for it to go as high as 5,400 to probably as low as 5,100. And pretty much to trade in that 300-point range for the next 2 to 3 months until we get a catalyst to move this higher. Again, there's a lot of geopolitical things to consider here, but being a little bit more on the optimistic side, we believe we will get that pullback, but not the sharp correction that a lot of people might be expecting and how we had it over the last couple of years. Unless the EU debt crisis escalates, there's a possible downgrade to our credit rating. And if the Libyan issue and Syrian issue escalate in the Middle East. So hopefully you enjoyed our little analysis here of the May 2012 outlook by Atlas Wealth Management. You can go to our website at Atlas Builds Wealth for articles and a link to download a retirement calculator. Thank you for attending another monthly market outlook video by Atlas Wealth Management. Visit our website at atlasbuildswealth.com for more articles and also other event dates. Thank you for attending.